Today, the market threw a President's Day sale. You just didn't know it. Yep, almost everything got marked down today, and as usual, potential buyers ran from the sale rather than embracing it. Dow ultimately plunging 697 points. The S&P plummeting 2%. The Nasdaq nosediving 2.5%. Look, I don't blame anyone for fleeing. We have so many things going wrong right now. This morning, we just heard from two of the largest retailers in the whole country, Home Depot and Walmart. Got the CEO of the latter on tonight. Both companies made it clear that there's really no end to inflation, that it's eroding the purchasing power of the American consumer still, even as both companies are doing their best to contain it. At the same time, long-term interest rates, well, they just keep going higher, making stocks less valuable in comparison to bonds. That's a terrible combination. All centered on the fact that no matter what the Fed does, it doesn't matter. It can keep raising rates and nothing seems to stop inflation. When the market cascades lower like this, you have to recognize that we're going through what Wall Street's call a reset. A reset. Look, in plain English, that means almost all stocks have gone up too much since the beginning of the year, and they now have to repeal some of that move. Remember, the 2023 rally has been all about the idea that the Federal Reserve will soon be finished raising interest rates because it seemed to be winning the war against inflation. Now, it doesn't even seem to matter to people. It doesn't matter that Jay Powell, the Federal Reserve chief, never said that he was about to win. He was not about to declare victory. He made some encouraging comments about disinflation, but he also made it clear that we've got a long way to go. It doesn't matter that he said there's been persistent inflation in wages, the thing the Fed worries the most about. The real big trigger pullers just assume we were in what I call a Dr. Pangloss market. Yeah, all is for the best in the best of all possible markets. So they bought the industrials. They bought the banks. And most important, they bought a ton of small cap tech stocks that just weren't worth what they paid for. Now that we're getting discouraging data on the inflation front, much of the buying, well, it needs to be unwound. Sell. That's why the selling's so aggressive, so torrid. Tons of institutional money managers just simply got the market wrong. They knew nothing. Amazingly, the big bond traders, they got it wrong too. Those who bought 10-year bonds thinking the economy would cool and inflation would go down also got bagged. Now they're selling bonds aggressively, which causes long-term interest rates to rise. More competition to stocks. So what does this have to do with you, with your portfolio? Well, it means that this darn President's Day sale may not be over. It might be one of those sales that lasts a couple of days longer to keep marking them down. Maybe today was just the beginning. Which brings me to the big questions. How long will the sale last? How do you know if it's even worth taking this opportunity to do some buying? Should you be joining the sale rather than buying into it? Sell. Let's take them one at a time. Should you join the sale? Depends. If you own stocks that are up huge for the year, it's definitely not too late to sell them. The S&P 500 is up low single digits right now. So if you own a stock, say up 25, 30, 40% more, recognize that the sell-off here is probably far from over for you. If you want to join it, take something off the table, even if today's bruising, you know what? Not a bad idea. However, if you own stocks that are up as much as the averages, not much more, I wouldn't sell them here. Not worth it. You can try to swap out and swap back in, but I fear you won't be fast enough to figure out what to do and get back.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.